There's no rally that can hold in this market here, folks. We're going to be taking a look at some earnings that just came out from Shopify. We're going to look at Bell Telecommunications here in Canada and the future forward-looking earnings that I'm anticipating. But after that Fed meeting yesterday, all the markets rallied back. Everybody was excited. We're like, yay, finally some hope. And now it looks like we're giving all of that back today here, folks, because there is not a lot of green except out of Bell, which posted reasonable earnings, but even that is starting to pull back a little bit here today, folks. But oh man, we just got like a little sign of hope yesterday and now it's all gone. Anyways, it's real funny too, because as I mentioned yesterday, I think it's just ironic now that gold and silver and precious metals purely trade off what the markets do, because both those are pulling back in tandem with the markets today, folks. But let's get into this, because Shopify shares hit a 2-year low on profit miss and softer outlook. And honestly, these numbers weren't nearly as exciting as I was hoping them to be, and I'll show you what I mean by that. And they kind of over-exaggerate them, but the stock is trading down 16.91% on just kind of missing here, folks. So here's the first quarter reports. If we scroll down, this is what I don't like too much about Shopify. Let me scroll in so you guys can see this. The total revenue in the first quarter grew 22% to $1.2 billion. Sounds great, which represents a 2-year compound annual growth rate of 60%. Now, this is kind of, why you can't really compare the 2 years here, because last year was a bit of an exception here, right? And that's still great earnings growth, or just revenue growth, don't get me wrong. And they also did a massive acquisition. If we scroll down here, guys, they acquired Deliver, which is allowing them to do inventory receiving and inspections and cross-docking capabilities, inventory placement, algorithms that route inventory based on predicted merch demand. So they're kind of just fully expanding basically into that delivery aspect and the logistics side like Amazon does, because we all know they made that massive investment into warehousing. But if we scroll down farther here, the things that I don't really like to see is the fact that they're basic, if I can get that out of the way. If you guys see, let me just full scale this. The revenue is from a subscription solutions here, guys. That's what I want to pay most attention to, because it's the sticky part of their business where, you get your website, you're paying that monthly fee. And we can see that actually only grew nominally, I think by like 3% or something like that, from 320 million to 344 million, whereas their merchant solutions grew from 667 million to 858 million. So that's where all the growth is currently coming from, not that fundamental sticky aspect of their business. It's all this future looking expansion. So I can see why Shopify is making large investments into the logistics side of their business, right? So let's talk about Bell Telecom here, guys. The first telecom in Canada to post. I own this. This is a fairly large proponent of my portfolio, not Bell, but TELUS, which will be posting, I think, tomorrow. But they actually hit their EPS expectations, beat their EPS expectations by 10.39%. They missed a little bit on revenue, but not enough to make an incremental difference here. And if we take a look, guys, I don't think most people are aware. If you know Crave, they do own Crave, which is part of their digital media strategy here. And Crave subscribers are up 3.4% year over year, surpassing 3 million. And clearly, unlike Netflix, people aren't nearly as fixated on that with these telecom giants. I love these telecom giants because they're so diversified. You get the sticky business of wireless, the expansion into 5G and fiber optics. And with Bell here, they have the media aspect of their business. And if we scroll down, we can actually see the different buckets. With Bell Wireless growing on the postpaid net adds of 4% year over year, postpaid churn 0.79%. None of that really matters to the turnover aspect of things. You got the retail internet net adds 22.7%. So the internet is blowing up right now here, folks. And then just taking a look at the digital revenue growth is 84%. And again, the Crave kind of being in here, the sports aspects of their channels. They've got a few things going on. I love these telecom giants for those reasons. So I'm going to be paying attention to a few earnings coming out. TELUS is the one that is like one of the largest positions in my portfolio. And these companies have been doing very, very well this year. I mean, look at this. TELUS is up 7.5%. And I'm a little concerned because they have that exposure to the telehealth aspect of their business, whereas Bell has the media side of their business. So they kind of both have these like cherry on top of their cakes for growth outside of their sticky business with the wireless networks and stuff like that. We're gonna have Enbridge coming out tomorrow. This is one that I'm fixated on because I recently started adding it, and it's still holding its highs this year, trading up 16.94%. And if you're interested in the oil plays, which I'm not as much, you can come into Suncor for May 10th to post earnings. This thing's up 45% year to date, and from a long chart here, they just cracked some of their highs that they saw going into the March 2020 crash. So that's pretty intriguing. Finally, bank earnings. These are another huge proponent that I'm really going to be fixated on because they've pulled back, still outperforming the S&P 500 pretty dramatically this year, even though they're down about 3 to 4%. But yeah, we got Royal Bank coming up May 26, along with Canadian Imperial Bank, which is down 5% year to date, and then Toronto Dominion Bank on that same date. So we're going to have 3 earnings for these major banks on the same day, and it'll be neat to see how all of that turns out here, folks. But from a market standpoint, this is definitely an accumulation year because it's a bear market rally. Every rally we get is just followed up by a complete sell-off to typically what is looking like new lows here. So from all the earnings that we've got so far, I would just be buying. Shopify is trading down dramatically, and its earnings really weren't that bad, even though the business is slowing to some extent. Same thing with all of these companies though, right? Like they're all mixed earnings here, whether we're talking Facebook or Google missing on YouTube. There's just so much opportunity to pick up fair value or better value companies. And that's what I hope most of you are doing, or at least buying the indexes. But we're going to talk about indexes in my next video, so consider subscribing for that. Let me know what you think in that comment section below. But stay cool, stay awesome. And as always, I look forward to catching you in the next one.